Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon, all. Ira Epstein of Linn Associates with your agriculture update for this Monday, the 24th of September, 2018, and we're about 4:20 p.m. Central Daylight Time. In the grains, a mixed day. The corn bounced, the wheat bounced, the cattle market fell today. You know, we had the cattle on feed report on Friday. I thought the report was neutral to slightly bearish, and we're seeing that right now in the market. And the beans were down 6. We got at the end of the day the crop reports, getting an idea how they're doing. They're maturing fine. I'm not seeing any problems, so I'm not going to list all those out. Don't see a need for it just yet. We're still in this area when you look at the weekly area chart of closes of that big break. We had a bounce finally from this low in the 814 area to 886 and pulling back. And again, this is closes only. Remember that. This is a daily bar chart showing the highs and lows. And I think the one thing you should focus on is this sideways action the market is in at this point in time. Admittedly, the market made a new break low at 812.25, rallied about 40 cents, but since then it has been faltering, today down 6.25 cents. Look where the market's pulling back to. See that red line, the 18-day average of closes? Remember what I call that. I term that the line in the sand. And the line in the sand means when you're under it, if the market rallies, that could offer the resistance. If you get above it, often it pulls back to it. When you're in a sideways type pattern, you rarely get big moves one way or the other, and that's what you've got. And you can see the sideways action with these black dashed lines from the Bollinger Bands. They're not trending down. They're not doing what they did back here. They're suddenly going very much into the sideways pattern. Sideways like up here. Sideways patterns are where trends develop from. And unlike this, no, I'm not saying it has to drop. I'm saying from the sideways pattern is where the trend sets up. And that's what I think we're in. I think we're in a setup time. When we look at the slow stochastic oscillator for momentum, any number over 70 is overbought. We're not there right now. We've got our numbers, the highest 68.72. So the nice thrust up, the pullback is putting the market in order. Is there a trend? Well, that's your problem. You've got the bias up because the market's over the 18-day average. The momentum had been going up, looks like it's stalling a bit, and you've got this pattern of lower low, higher high. You have hit both the lower Bollinger Band and the upper. It has stopped all the action in the market. The meal market was not strong enough to get up and through that 18-day average. We just seem to be playing a game against that 18-day average with us unable to get to the upper Bollinger Band. But again, I want to point out that sideways action, lack of momentum. The flip-flop here is the bias turned down, momentum's turning down, and I'm not seeing a real trend. In the soybean oil market, you have a pattern of a lower low and a higher high. What set this up is when you get a pattern called an embedded reading. It's when the two numbers that make up the slow stochastic are going sideways under 20. When you lose that, prices often make a run for the 18-day average. That's what happened here last Thursday. Then the market followed through a little on Friday, and today even a bit more. Does it have the power to get up to that upper Bollinger Band? Well, we'll find out, I guess. Are we trending? No. Is the market overbought? No. So the bias is up, the thrust has been up, but you're not in what I'd call a trend. In the corn market, 18-day average is the problem for this market. You did this back here, you did this back here. So this market has come up. We realize where we're at. We're in the harvest season right now. And yes, I want you to remember this word, this phrase, harvest lows. When they come in, how they come in, we'll see it in the price action. And we're getting to that point now because these farmers, they're out there. They realize that the wet weather's coming, the cold weather, and if their crops are ready, and it looks like they've had a great crop here, I'm guessing they're out there in numbers. I know one of our guys over the weekend took a ride out into the countryside. And yeah, in Chicago, outside of it, we do have a lot of farms. and they brought in a soybean plant. I mean, I couldn't believe how many pods were on this. You know, admittedly, it's one area, but boy, I sat there, my eyes bulged out. As you look at the wheat market, this is still in the thrust of an uptrend. Higher lows, higher highs. If the market can keep going, 539.5, the 100-day average, offers the line of resistance. Support is back at 520.75, and you'd have to take out this 515 level to stop the uptrend from continuing on. Sugar has resumed its downtrend. It's got the pattern of lower highs and lower lows. The problem is you're instantly oversold. But let's assume it continues on its way down. If it does, I'd look for the support in the 1010, 1015 zone. On rallies, I would expect that you'll see resistance back in the 1080 area. The problem is I don't think a lot of traders like to sell oversold markets. When we get to the coffee market, I feel like a broken record every time I bring up this chart. I keep pointing out that all the rallies so far, doesn't mean it's going to work that way forever, they keep failing against that 18-day average of closes. Now, if you want to see a change of trend, what this market has to do is get up and close over 170, not take out this 95.10. That would give you higher lows, higher highs if you closed over it, and if momentum then starts shifting up, there'd be something to talk about. Until that occurs, who's controlling the market? The bear. And he's been aggressive against the 18-day average of closes. You've got the pattern lower highs, lower lows. You've had a bounce, and you really didn't go anywhere. In the cocoa market, we're bouncing away from the lower Bollinger Band in an oversold condition. So one of the things I try to teach you is markets that get this sideways action, and I think I was pretty clear, this wasn't as sideways as I'd like in a classic sense, but you did make your run for the lower Bollinger Band. You often, on the first run to the lower band or the upper, you get an extreme. So in this case, it's oversold. You can see how the market's bouncing, bounced again, fell back on last Wednesday, got back over the Bollinger Band. It's called riding it. Keeps coming down to it, and today you got enough of a rally to break that cycle. Now you have a higher high and a lower low. So I'm going to say that I think the downtrend is over. If we look at the slow stochastics, you never did get the embedded reading, is my point. You lost the ability to do that. You're just in an oversold market, probably going to the 18-day average looking to see what it's going to do. In the cotton, you still have the embedded reading. That means rallies on these little bitty areas still are getting bearishly sold. I wouldn't be surprised if you make another run for the lower Bollinger Band, lose the red line, get it back over 20, I'll have a very different attitude on this market. Until then, I'm not there. In the cattle market, you kept the embedded reading, but my guess is when you reopen tomorrow, you're going to lose it, just like that. If so, don't be surprised if price and the 18-day average make a run at each other. Now you've already got that confirmation signal in the November feeder cattle. You'd have to get back up over these highs to tell me that that isn't going to happen. This rules the day. And yes, you can get it back. You can get the embedded reading back only the day after you lose it. But you're down so much, I don't see that happening right now. In the hog market, be careful here. You're starting to roll over. I want to remind you, I'm going to hold a live webinar, and that webinar is going to be this Thursday on the 27th. So in order to attend it, I'm going to send out first thing in the morning the invites. First come, first serve to get signed up for it. The password will be in the email. So many of you don't read that confirmation email, and it's there. We don't put it out on the website here. It's nowhere else. Read it after you get it. Expect to see it first thing in the morning from me. I'm Ira Epstein. You have a good day.